Welcome everyone to another video of Small Business Treasury. And today I have a question that came in and I want to address it because I think it's a very good and important question. The question was, what is the best bank for a small to growing business that is producing over $1 million? That's an excellent question because I will give my perspective from corporate treasury, and I want to give you the reasoning and the logic behind my opinion. Okay. So my name is Frank Molina. I come from a corporate treasury background. I've been in it for over 10 years. I work at a $1 billion organization now, and I have been leading the treasury department there for over several years now. And my job here in this channel is to educate small business owners, implement the strategies behind the treasury departments that are used at large organizations into their small businesses. Okay, going back to the question, what bank is best used for small to growing businesses that are producing over $1 million? Fantastic question. And in my personal opinion, this comes from what I've seen in the field and what I've seen organizations pivot to. My opinion goes to use a big, large commercial bank within your designated country. So I'm based out of the US. I'm going to go with your big banks, your Bank of America, your JP Morgan Chase, your Wells Fargo, these big banks that you may have good relationships with. Maybe you built them up from previous endeavors and previous business operations. But the smaller that you are and the more you have a history with the large bank, the easier it is going to be when you transition and you continue to grow your business. Now, the reason behind my selection of choosing a big bank is because in my previous organizations, when I was in my early 20s, mid 20s, one of the big banks that I used was JP Morgan Chase. Now, JP Morgan Chase has a retail banking and then they have a commercial banking side. So on the personal side, they have JP Chase, which is just normal everyday individuals like you and I. Then they have the entry level business banking, right? And then they have the commercial JP Morgan, that's also known as JP Morgan Chase Access. JP Morgan Chase Access is the large institutional organizational platform used by JP Morgan clients. So the reason why I say go with these large institutions is because as your organization grows, your banker is becoming aware of your business needs. They're becoming aware of your volume, your growth, your business operations, your daily activity, and then they're familiar with the business. Okay. In addition, you are more protected when it comes to capital needs and cash operations. Okay, which in other words of saying solvency. Big banks are going to be solvent. You're not going to have any issues with cash liquidities and cash shortages of that nature. And I'll have a story about that in a second. Okay. In addition, these large banks, because they have operate in such mass quantities, they're able to offer products and services at a lower fee because they package them into treasury services for the client. Okay. Many times over, you can have your JP Morgan checking account. At the same time, you have your money market fund, you have your investment accounts, all of them within the same platform. So in my organization currently, we have our commercial bank and then we have our money market fund, and it's all within the same institution, and you can move cash back and forth very quickly. So you're fully liquid at any given moment. Okay. And the explanation of money market fund, it'll be another video, but that's essentially a high yield savings account for your commercial accounts, for your commercial businesses. And essentially, anytime you are able to move cash that quickly, that's what's called liquidity, right? And it's very important to have that type of liquidity as a growing business. Okay, at your small banks or your regional banks, yes, they offer good services, and yes, they're able to offer good terms and things like that when it comes to lending. If you have a good relationship with the banker, that's great. But for a growing organization, you want to have the best products and services with the best team commercial customer service available to make sure your business is fully operating at its best. Okay, and treasury as a service from the banks is usually offered in packages. Okay, so at large institutions like JP Morgan Chase, when they issue these services, they're easily implemented because they are already prepared for different clients, and they are able to be implemented within 24 hours to 48 hours within your organization. So I'll give you an example. if you have a JP Morgan Chase account and it's the commercial banking or the retail banking, and then you are growing your business, you are able to transition from retail banking to commercial banking, and you need to start implementing ACH fraud or positive pay, which is something that you should have been doing from the very beginning. But let's say you're starting to grow and you're implementing it now. That that implementation is very, very, very rapid because it's already within the same organization, and JP Morgan and other large banks similar are able to implement it within a few business days and with a streamlined process. Okay, there's no issues, there's no major errors that can go wrong. That's the power behind having a big bank behind your treasury functions and your checking and your business checking accounts. Okay, so with large institutions, it's like its own ecosystem. You have your banking accounts, you have your payroll accounts, you have your subsidiary accounts, you have your money market accounts. Okay, everything is operate within its own within its own banking platform, with its own login, with its own the power of a large bank behind it. So it makes your job as the owner, the CEO, the founder, the CFO, whoever is responsible for daily banking operations, to make sure that it streamlines your process and make sure you are fully have the resources available to make sure that your business does not suffer due to operational neglects or anything like that. So now I want to explain the importance behind solvency. In one of my previous organizations, during our growth process, okay, so just like any other organization, we had a startup growth and uh, then compounding into a large institution. During the growth process, this company was based out of California. They were using a small regional bank. You would think, oh, that's a small regional bank. You have good relationships. You have personal relationships. Maybe the CEO has lunch with the banker a couple of times. Maybe the treasurer has a history with the banker there. Everything is all well and good. And then one thing happened a couple of years ago where there was a bank in in California that went insolvent. And in that moment, the CEO of this organization of the story, they decided to quickly pivot because they realized, oh shit, everything within our organization, our cash in our bank accounts is at risk for an insolvent bank. Insolvency usually happens at the smaller regional and local banks. So at that moment, the CEO decided we need to pivot to a large bank that is able to handle all of our growth processes, all of our cash needs, all of our liquidity, and at the same time have peace of mind of solvency in case things happen in the future. So that was the number one reason for the pivot between a small regional local bank into a multinational, one of the largest banks in the country. It was because that moment the CEO realized they were at full vulnerability if at any moment the bank that they were using was insolvent. And insolvency, okay, most corporations are at risk, right? As we all know, FDIC protects personal accounts up to $250,000 per account, but at the corporate level, those things are much different. At the corporate enterprise level, if you're holding $1 million in cash, a significant portion of that is at risk if the bank goes insolvent. Okay, so that was a big reason behind, okay, how do we pivot outside of regional banking into multinational banking? And at the multinational banking level, it's a streamlined process. Everything it's in an own organization. You have your money market fund. You have better interest rates to your money market interest because large corporations, they're able to offer better terms. And the more cash and deposits that you have within your bank, the better terms that you have. And you have liquidity at a daily basis. You don't have to be calling the representative. You have your dedicated banker, right? So these are the big advantages of using large multinational banks. Now that's going to be different for each organization and depending what step in the growth process they are. But that's an example of this company that was once using a small regional bank. They were growing an organization. They were growing very, very rapidly. They were doing mergers and acquisitions every single year, and then they quickly realized that they were at risk. They were vulnerable because of insolvency due to small regional banks. So they decided to pivot to a large institution that can handle the volume, that they're not going to worry about solvency issues, and that they can offer all of the treasury services that are specifically needed. For example, JP Morgan Chase, it has everything from money market funds to business checking to payroll accounts to credit cards, which is under the payment net uh, platform. Everything is fully integrated. It's its own fantastic system. And when everything is streamlined and with its own system, it makes your job as the person responsible for banking activities, whether that's the CEO in the beginning, or you delegate that to the CFO, or you even grow so fast that you delegate that to your treasurer. It makes their job significantly easier to make sure that your business does not suffer. Anyways, that's all for today's video. If you have any questions, put them in the comments and I'll make sure to address them here. My job is to give as much value and free education to all the small business owners so you all are aware of the importance of treasury within your organization.